You're watching Byline Wilmington on CBS 10 WILM. Here's your host, Don Ansell.
We're back. We're talking about mortgages, banking, credit cards, credit scores, refinancing. Our guests are both with Newbridge Bank here in Wilmington. Area executive is Mark Johnson, and Alan Efting is the mortgage banking manager at Newbridge here in Wilmington. So if you find out, first of all, can you check your own credit score?
Yes, you can.
Yeah.
myfico.com. You can get your credit
Say that
score
again?
there. myfico,
Okay.
myfico.com.
You can check your own credit score. And what if you say there's something wrong there? They have some, I mean, you can check not only the number, but you can check what went into making that number?
Yeah, you can have your, you have a right to have your credit report checked once a year, free credit report. But you should have your credit checked, check it yourself online.
And if
make
something's
sure,
wrong, what do you do?
Well, first thing you would do is contact the reporter of the incorrect information if you can. If not, then you file a dispute with the credit bureau that is reporting it.
I see.
And those disputes
And
can be done online.
have the appropriate backup information too.
Well, if it's incorrect, you may not have a whole lot of backup information.
Well, it's true. Just to relate a personal story, I had a bankruptcy on my credit report that wasn't mine.
Oh, wow.
And it was removed, but it showed up. People said, well, you have a bankruptcy on here. And I
Well, you may have to prove who you are.
Right.
And as opposed to who they had that information reported.
How about fraud? Does that play into credit scores sometimes?
Absolutely.
Folks using other people's names, social security numbers, that kind of thing?
Yeah, credit fraud and credit identity fraud is a big problem today, and that's another reason why you should be looking at your credit closely.
Let's talk about the kinds of mortgage options that are out there today. Conventional?
Yes, conventional financing is with Fannie Mae and Freddie Mac typically, and that's
I always like to think maybe people don't know who these folks are, or they're not folks, they're entities. But give us a quick.
Fannie Mae.
Yeah.
Fannie Mae is a was semi-government. Now the government 100% has taken over Fannie Mae and Freddie Mac. But they are government agencies that buy loans and then break them up into securities and sell them on the market as bonds.
All right, so a customer comes in, Newbridge writes a mortgage, and then that mortgage is sold?
Potentially. We do also book some mortgages on our balance sheet.
And can hold them and service them yourselves?
That's correct.
And if you sell one, is that where Fannie Mae and Freddie Mac come in? They guarantee?
That's correct.
Guarantee. Do they guarantee the mortgage that you hold, the mortgages?
Well, I guess guarantee is a strong word, but,
okay.
but they certainly, once we sell the mortgage, I'm not.
Well, the mortgage is going to get sold to an investor typically, someone like a large institution, a bank, and then they are going to, in turn, finance that money with Fannie Mae or Freddie Mac. We also do that. So we may keep a loan in our portfolio, but we may sell the security to Fannie Mae or Freddie Mac.
Is there such a thing as shopping for the best deal?
Yes, you should.
You should.
Absolutely.
You should shop interest rates. And let's clear up some terms that folks may not be aware of or familiar with. Points. What are points?
That's a very good question, Don. Points, if they're referred to as discount points, they are used to buy the interest rate down, strictly.
So you pay something up front to get a less
To get a lower interest rate.
that's called points.
That's called a discount point.
So if you see, so all interest rates, although they may look the same, if you look behind this at the small print, what you're paying may not be the same.
They may have different costs to them. There's also an origination point.
Origination fee, sometimes they're called.
Origination fee.
Yeah.
And not to confuse the two, because an origination fee is our income. That's where we're going to earn our income from, is the origination fee. The discount point, or
so that's what the company providing the mortgage service, that's their pay for doing this.
That's correct.
It's called the origination fee. Points are a way to pay down. to pay upfront money to pay down so that your interest rate is lower
Yes.
on the term of the loan. You have to have an appraisal.
Yes, in most cases, we're going to
You have to
require
have
an appraisal.
a qualified appraiser come in and tell them what.
What the house is worth.
What-
Are you paying a
what-
fair
right.
price, or is it worth what you claim it is for a refinance?
And what's title insurance?
Well, title insurance basically is, in the closing process, there are errors that can happen. Let's say your loan did not get recorded accurately, or when a title search had taken place, a previous lien was not picked
Right.
up. Title insurance basically is the insurance that is a fallback for the banks, that if the attorneys, for example, were to miss
Guarantees
something.
the bank that if there was a mistake made, they'll underwrite the mistake.
That's correct. That's a very good
the
way of
cost
summing
of-
it up.
of-
Yes, sir.
All right, let's. What are some common mistakes people make with their credit?
Gosh, you know,
Is closing a credit card a mistake?
no, credit is, as Alan said, it's something you need to check annually. We encourage it. Closing credit cards, you will hear things on different radio shows, whatnot. I do believe you should always have at a minimum 1 or 2 credit cards open. If you carry balances, some of these models actually give you, that's a favorable thing if you carry
It's better
balances.
to have a balance
And pay them on time.
and pay them on time, but not too big a balance.
That's correct, not too big of a balance.
If you're maxed out, you're more of a risk
Absolutely.
to whoever's looking at your credit.
That is correct.
What about late payments?
Well, that's obvious.
Yeah.
Obviously, late payments have a big impact immediately on your credit score.
What's changed in banking since we came to the brink of financial collapse? And is that an overstatement? A brink of financial collapse in 08?
I don't think it is
Okay.
at all. It's and a lot has changed. We hit on the fact the regulatory pieces a little earlier. That has been.
They were in place, but they were relaxed. Is that correct?
This is, yes, that is accurate. They were in place. For example, it would not be uncommon for us to lend 90% on a office project.
Right.
Now it's 75%, 80%. It's
And
very
that's
strict.
put a hurt on development.
Absolutely.
Because the money's not as easy to
It's, you know,
access.
when you could come up with 10% on $1 million loan, now you have to come up with 25. That's a big difference.
And tell us a little about Newbridge. We really have a minute. I should wait till we come back, but we'll start with it.
Sure.
We'll do a little bit more when we come back after the break. Tell us a little about Newbridge and the type of bank that you are.
A great question. Newbridge Bank, the bank itself is about a $1.9 billion asset size bank. So that fits us in a very regional role within North Carolina.
Is that what's called in some circles a community bank?
Absolutely. We are 100% a community bank. We are in our Lexington, Greensboro Triad area, High Point. Then we jump down here to the coastal region. We have a branch as well in Virginia. Here locally, we have 3 branches, one in Burgall in Pender County, and then we have 2, one on College Road and one here
We're going to take a break.
at Mayfair. Yes,
and
sir.
we'll talk more about Newbridge Bank, actually, and how they fit in the model of banking, and how do they compete with the mega banks, the too big to fail banks. So stay with us. We'll be right back.